Hey everyone, welcome to your latest Glass Half Full. I'm in front of Jimmy Fallon, The Tonight Show, joined by none other than Mr. Jimmy Fallon. No, it's Sonu Varghese.
Yeah, in front of Radio City.
And Sonu's in front of Radio City.
And we're celebrating the Knicks.
That's true. This is Talking the Knicks and AI. Because we're in New York City. The Knicks just won a championship. We're right on the avenues of America, 6th Avenue in the middle of the world. What are you in New York for?
Meet several people and all of that. And yeah, it's like, I did expect this to be Knicks town, Ryan, but I walked into LaGuardia Airport. I came off the plane and it turned out to be mini Europe and mini South America with the World Cup.
Yeah, just walking around, there are a lot of World Cup stuff happening in New York City. But let's dive, we've got a minute. Let's dive into this. Congrats again to the Knicks. We heard if you used the word Knicks in the title, it helps with the algorithm, so we're going to try it. We're going to try that. That's about the extent of our Knicks conversation, though. We are in New York City. Sonu, the AI trade, right? It's all coming closer. So AI has just been on fire. We know that. It's been very volatile, though. We've had some huge drops, historic drops. The South Korean stock market just was down, 9.99%. I think they kind of closed it off around 10%. One of the worst days ever. Obviously, that's been a huge winner with AI. The time we're doing this on Wednesday night, Micron just came out with huge earnings. We don't know where the stock's going to be by the time you listen to this. Odds are it's going to gap significantly higher. Where are we with this AI trade?
Look, it's been a momentum-driven market, and I would argue probably since this bull market started in October of 2022, we're about over 3.5, if my math is right, 3.5 years into this. Yeah, it's been, and that momentum-driven market has been powered by AI, right? It's been the AI story. And what happened with Micron tonight, it gets to the fact that the AI trade is also driven by earnings and profit growth, which is why we are seeing Micron go as high as it is, because earnings are really good. Why is Micron doing well? It's a story of all these AI-related names. Everyone needs more computing power, which means you need more data centers, which means you need more chips, which means you need more memory. Right. And of course, the other side of that is also inflation. But for now, one person's inflation, one is another company's profit margins and profit growth. That's what we see.
And speaking of profit margins, it's funny when we do these, we never know what we're going to talk about. But here, I'm going to go this angle. Here we go. Last week, Apple CEO Tim Cook was talking to Microsoft. No, sorry, he was talking to the Wall Street Journal. And he said, listen, because of the memory chip shortage, because the increases in prices across the board, we're going to charge more. So that iPhone you use, the different products of Apple, the reality, everyone, sorry to be the bearer of bad news, it's probably going to cost more. But we've been seeing that across the board. And the funny thing about it, the market rallied after that news came out. Tech had a huge day. Apple was higher because, again, it likely means higher profit margins. Eventually, of course, if companies keep increasing things, eventually we'll hit the point of no return, so to speak. Good news, we don't think we're there. Just on the economic front, I'll say a few things and bring in. We've just saw some PMI data on manufacturing, strongest in, I believe, over 3 years. Yeah. Services, strongest since February. We know about earnings. We talked nonstop how strong the earnings have been. The labor market's coming back. Over 500,000 jobs created the last 3 months. We made like barely 100,000 jobs all of last year. One of the big stories, I think, second half of this year. Isn't it fun? All these people just honking. I think it's all. Are they recording? Glass half full. They're honking at us. They're honking at us. They anyway. We've got fans all over the place. Anyway, I don't know where I was going with this.
Now it's a comp.
Yeah, now it's a comp. But the reality, Sonu, again, the economy's coming back. What do you think?
Look, it seems like we're in a bit of an acceleration, and of course, most of the economy is driven by consumption. And as long as the labor market is doing well, that means consumption remains strong. But again, getting back to the AI trade, up until a couple of years ago, information technology, hardware, and software was about 3% of GDP, 3% of the economy. Just over the last year and a half, 2 years, that's increased to almost 4.5% of the economy. It is actually higher than it was back in the late 90s, right? It's not quite where housing was in the mid-2000s, but at the rate we're going, we could be there. And this is excluding stuff like construction related to data centers. So there is something massive happening with AI that's feeding into the macroeconomic data, and obviously it's feeding into markets too, Ryan.
So from an investment point of view, as of, I guess, well, right now probably too, but as of last week, tech was up 33% for the year, by far the biggest winner on the year. I mean, that is stretched, right? Some of the old time listeners like myself and you others, Sonu is older than me by, well,
2 days.
more than that, 5 months. Obviously, he looks like 10 years older than me, but nonetheless, the reality is this is a heck of a rally. Now we've had volatility. In the late 90s, we saw extremely strong moves with a lot of volatility on the way down, and then it continued to go higher. Sonu, let's say technology is up approximately 30% for the year, the time that we're doing this. It's pretty close enough for government work.
Yeah.
Do you think the rest of this year technology will still be higher than where we are now? And will tech continue to lead, or will something like other cyclicals like financials, industrials, healthcare, well, the healthcare is not cyclical, but will the baton be passed around more the next 6 months or so?
I think tech is so big. The story of AI is so big that without making an explicit call, look, I think you want to ride the wave. That's what we titled the outlook, right? But you don't want to go all in. You don't want to put all your eggs into one basket. And this week was an example of that. When tech pulled back, the market didn't entirely pull back. You got some rotation. Sectors like financials, healthcare, low volatility stocks, staples, all of that did well. That was actually positive. So it was rotation as opposed to everyone fleeing stocks in general. But I think over the rest of this year, I think technology, the pie is just going to get bigger. I don't think it's zero sum. I think technology and the overall market goes up and drag everything else up with it.
Well, speaking of pie, show them your bag. Show them that bag, Sonu.
Yeah, I got
Yeah.
some dessert.
We had an amazing dinner at Del Frisco's just a block that way in New York City, and Sonu couldn't eat all his dessert. I didn't have a problem. I ate my dessert. I was going to say something. I got sidetracked by the dessert. Let's kind of wrap things up here. So we're talking the Knicks. Congrats to the Knicks. Congrats to New York City. Amazing city. And the AI trade is not open. It doesn't mean it's not going to be volatile. I mean, you have big down days, big up days. Oh, that's where I was going. Sorry. On Tuesday, so by the time everyone listens to this, on Tuesday of this week, the S&P 500 was down 1.4%, right? Technology, I believe, is down 4%. I guess 3 or 4%. Big down day. Very volatile. It's going to bounce back probably here by the time most people listen to this. The reality, though, on that Tuesday, when the market was down a whole bunch, there were like 285 stocks in the S&P 500 higher. In other words, more stocks were up than down in the S&P 500, yet the market was down. What's that tell us? Well, the top-heavy technology part dropped, but like Sonu just pointed out, rotation. You've got regional banks doing well, community banks doing well, biotech doing well, industrials hanging in there, financials doing better. Lifeblood of bull market is rotation. And even on a bad day, like we had on Tuesday with tech really going down, it wasn't like everything sold off real hard. Sonu, let's wrap it up. What do you want to finish with?
I mean, look, it's easy to say diversification. It's a cliche, but I think now more than ever, you want to be diversified, and you don't want to, like I said, put all your eggs into one side of the market. Be diversified, and I think that's going to help over the long term.
Well said. This again was your latest Glass Half Full, live on location, Avenue of Americas, right in front of. There's Jimmy Kimmel there.
Radio
City there, right in the heart of it all in New York City. Everybody, thank you. How long do we go here? Well, we didn't go as long as last time. That Fed one we did last week was like 13 minutes. We apologize. 13 minutes talking about the Fed. That just sounds terrible. I'm sorry you had to listen to that. Not season. But listen, everybody, we appreciate it. We're going to keep doing these. We'll see everybody next week. Sonu, tell them bye.
All right. Thank you.
Yep. Bye, everybody. Thank you.